Lyft and Uber say they will leave Minneapolis if the mayor signs a minimum wage bill for drivers. So let's check this out. So, Lyft and Uber threatened to stop doing business in Minneapolis after the city council adopted a new rule Thursday that would set a minimum wage for rideshare drivers. Now, personally, I've never used Uber. I've never used Lyft. I don't really understand how like the pay structure works. But to my understanding, you're basically like a contract worker, unless I'm like wrong about that, where you're basically like your own boss. And you also got to basically factor in your expenses so that you could like write that off on your income because again, you're basically your own boss. So your gas can be, written off or should be written off. Your car insurance should be written off. Like just your like maintenance for your car should be written off. Maybe your lunches that you eat or snacks that you buy while you're driving should be written off, or at least if you're doing it correctly, to my understanding. Which means that you could really, like, probably be doing way better than someone working a minimum wage job because you could literally write off a whole bunch of your expenses. At least that's to my understanding. If you have more knowledge about how the pay structure stuff works with Uber Lyft, feel free to give your thoughts because again, I'm not too familiar with it because I've just never used these apps. So in a 7 to 5 vote, the Minneapolis City Council passed an ordinance that includes a number of rideshare worker protections, including a minimum wage for Uber and Lyft drivers. Mayor Jacob Frey has the opportunity to veto the ordinance and has until next Wednesday, August 23rd, to do so. So the proposed ordinance mandates at least $1.40 per mile and 51 cents per minute within Minneapolis be paid to drivers. Minneapolis is debating the minimum wage as gig workers across the country are advocating for fair wages and job benefits. Now, like, I guess in terms of like, say if this was like a typical like job, like a delivery job or something, I can understand having like a pay on like a specific mileage. I don't understand a specific pay per minute while you're like delivering. To me, that doesn't really make sense because traffic can easily make like a 10-minute drive to like a 30-minute drive to like a 50-minute drive. Like, I mean, I've driven before one time just to go from point A to point B in general, where something that should have only taken like an hour took like 7 hours because there was a massive accident. So, does that mean that you're automatically going to be paid throughout that time? That seems kind of interesting. Let's see. Minneapolis is debating the minimum wage as gig workers across the country are advocating for fair wages and job benefits. In recent years, states and cities have attempted to pass legislation regarding the growing gig economy or freelance work through apps like Uber and Grubhub, but have generally met with fierce opposition. On Tuesday, Lyft sent a letter to the council saying should this proposal become law, Lyft will be forced to cease operations in the city of Minneapolis on its effective date of January 1st, 2024. Lyft, according to a statement sent to CNN Thursday, said the bill would be detrimental to drivers who would ultimately earn less because prices could double and only the most wealthy could still afford a ride. And what's crazy? It won't even just be like the most wealthy, it also just be the financially dumb that will keep doing Uber and Lyft. It's like, oh yes, let me just spend like $40 on like a 10-minute ride or something stupid like that. The company said the bill had been jammed through the council and urged Frey to veto the bill and instead allow time for the state's rideshare task force to complete its research. Uber sent an email to its drivers on Monday urging them to contact the mayor and city council to ask them to oppose the move. Uber said its drivers sent over 700 emails on Thursday, but did not specify what was in those emails. In its email, Uber said that legislation could greatly limit its ability to remove unsafe drivers from the platform and increase the cost of rides. If this bill were to pass, we would unfortunately have no choice but to greatly reduce service and possibly shut down operations entirely, Uber wrote. In an email to City Council on Wednesday, Frey said he was concerned about the ordinance. This ordinance stands to significantly impact our city in terms of worker protections, public safety, disability rights, and transportation mode shift goals, he said. After meeting with a broad group of stakeholders, which I've never really understood stakeholders, Frey said it is clear that we must allow more time for deliberation. After the ordinance passed on Thursday, Eli Peters, spokesperson for the office of mayor, Frey, told CNN via email, as the mayor laid out in his letter to the city council yesterday, he supports drivers being paid more. In recent years, states have attempted to pass legislation regarding the growing gig economy or freelance work through apps like Uber and Grubhub. In 2020, California passed Prop 22, backed by more than $200 million from the most influential gig economy companies. The controversial ballot measure allows the companies to treat drivers as independent contractors rather as employees. Though it was a major win for the likes of Uber and Lyft, it did include a minimum earnings guarantee, though it doesn't include the time a driver spends waiting for a gig. And in June, New York City announced a new minimum pay rate for app food delivery workers amid the rise in use of services like Uber Eats and DoorDash since the pandemic. Uber and other food delivery apps sued the city in July, maintaining that the law would hurt delivery workers more than help them. So feel free to give your thoughts about what you think about this whole situation, because to me, it really all depends on really if you are deemed as like an independent contractor, why not just basically structure yourself as like an LLC S corp to just basically write off pretty much everything that you can. And the reason why you might want to do that is because when you own your own business and you structure it correctly, which by the way, I'm not an accountant, I'm not a tax expert, go talk to someone like that. But depending on how you structure it, and if you structure it correctly, let's say that you were to make like $50,000 a year that you brought in from doing Uber or Lyft, right? You could basically write off pretty much all of your expenses, right? And basically drop your income to a much lower amount, meaning that you don't even have to pay the type of taxes that you normally would have to, even as an employee. Say you were to bring in, this would be like a great like year. Let's say that you were to bring in like $100,000 from your Uber or Lyft thing. You could basically structure it in a way where you pay yourself like 50 as like an employee. So you're like an employee to your own business. So you're only going to get taxed on the 50, but you're also getting to like write off all of the expenses on your business, right? So like let's say that you pay yourself 50K, but you also end up buying a car or leasing a car, etc. I don't really recommend leasing, but for this example, you could technically like write off the full amount of the lease if it is being used for a business. Now, you could also probably, depending on the weight of the vehicle, might be able to write off like 80% of the vehicle's purchase price at the point of sale, basically. Like after you buy it, bam, right? You could write off 80% of it, typically. So I think there was like a new law that got like came in. So let's say that you bought like a $40,000, $50,000 car, and it met that certain weight limit. You could basically just drop. Well, you could basically write that off, depreciate it against your income, etc. Meaning that you get to pay way less taxes, own something new, and also pay yourself income, while still, again, not paying the same amount of taxes that you would be forced to pay if you were an employee or a sole proprietorship or basically just a normal LLC or like an independent contractor, right? Like another example of this is like not Uber or Lyft, but there's like a lot of there's like a lot of truck drivers where basically they own their own rig and basically do all the deliveries themselves. But they need to structure it right so that they can actually make a lot of money and also write off a crazy amount of expenses. Like, the sad thing when it comes to like taxes and whatnot is like really the only people that really benefit from like paying very little taxes is if you own your own business or you only take income in the form of like dividends or something like very passive income like real estate rental income. If those are your main sources, you're basically pretty good. And the great thing again about businesses is that you could write a whole bunch of stuff off, right? This is also why like if you see a bunch of like YouTube ads or some other form of like advertisement about like someone selling some sort of like make money online thing, and you always see them in like a really nice car in a really nice place, they're writing all that stuff off as much as possible for their business because they're just tax write-offs. That's all it is. So they could end up buying like a Lamborghini that's like $200,000 if they lease it, which might cost them only like $20,000 to $30,000 a year. They can write that off completely on their taxes, right? You can basically get it to the point where even though you like the business brings in like $200,000, $300,000, you might on paper you're like you yourself might only be bringing in like 50K, 80K, and then like this business that you own with its checking account, etc., gets a whole bunch of these tax write-offs, gets to pay a way less money in expenses, and you have full access to all that money too. So it's just something to think about. If you do this sort of stuff, make yourself your own like LLC slash like I think S corp or C corp or whatever it's called, just for better taxes because you get to write off a whole bunch of expenses.